As briefly mentioned last week, ongoing short squeezes, allegedly produced by young Wall Street Bets subreddit stock market traders, basically slapped the face of many in the Wall Street establishment this past week, as GameStop closed the week up 400%, while the S&P 500 suffered its worst week since October 2020. What an interesting week it was for many of the younger traders on the long side of the bet. This week, we're not only going to dig into this chaotic, super interesting story that had virtually the entire world paying attention, but we're also going to examine how many in the Wall Street Bets subreddit crowd are beginning to explicitly yearn for a coming short squeeze on the global silver commodity market. How realistic is that today, or going ahead? Have we ever seen events like that in silver history? Well, the short answer is yes and yes. And we'll get into that info today. But first, hello there. On behalf of SDBullion.com, this is James Anderson, and this is your week's SD Bullion Market Update. Before we continue, please take a brief moment, go down and smash the like button. And if you've not subscribed yet, what are you doing? Please do so if you enjoy content that pertains to precious metals and the markets. The dumbed-down story behind the short squeezes goes like this. Hundreds of thousands of young Gen Z and millennial stock traders use their subreddit forum to discuss openly ideas on how to make leveraged bets in the stock and options market in order to make outsized returns. Often these young traders use the Robinhood app and use acronyms such as YOLO, and basically their stimulus checks put them all on highly leveraged bets. Collectively, they targeted floundering, heavily shorted stocks like GameStop, AMC, and Nokia as their recent short squeeze targets. By placing long options call bets, they force market makers to cover their hedges, and this phenomenon, once feeding on itself, can force those that are naked shorting these stocks to have to go out and into the market to buy those stocks. The kids en masse hold the line, refusing to sell their shares for profits, using their diamond hands, as they say, and this forces the price up to the moon in an exponential fashion as these shorts bleed losses day after day in their margin accounts and are forced to go out and pay ever higher prices for any remaining shares that are out and available. Reports are that a 34-year-old former Massachusetts Mutual Life Company marketing employee turned his 50,000 GME call option bets into nearly $50 million in peak past intra-week value. One of the more amazing parts of this story, and the screenshots that I've been watching over the past few weeks as this story's developed, is how very little that he's sold off. I think last I saw maybe 14 million, so there's a lot left of his winning bet thus far. The reason why is if he sold off everything so fast, it would crash the move in the stock likely, and it would lessen the pressure on these still scrambling shorts that are out there trying to find GameStop shares to settle their margin accounts. So just after the middle of this week, front-running, data-selling freemium brokerages like Robinhood and others briefly halted long buying for short squeeze stocks like GameStop, AMC, and others. The Wall Street Bets crowd understandably jeered, stating that naked shorts were rigging the casino rules to slant the table in order to help them lessen their ongoing losses. One of the most outspoken of the new stock trading crowd this past viral crisis year of 2020 into 2021, David Portney, was on Fox last night with Tucker Carlson, explaining why he believes this was such an egregious situation.
You know, I've been trading heavily since quarantine started, and I was shocked by this. I personally did invest in AMC and Nokia. Those are two of the stocks that the Reddit guys and the Wall Street Bets guys were pushing. I believed in the power of the internet. When I saw what Robinhood was doing, ironically, Robinhood take from the rich and give to the poor, even though they do the exact opposite, I was stunned. I think it's criminal. I think there has to be an investigation. I think people have to go to jail. Whether that actually happens, I don't know. But I've never been more convinced about market manipulation and the people, the hedge funds, controlling the game than today. I mean, just to wake up and say, hey, you can't trade these stocks anymore. You can only sell them. We're going to intentionally crash the market in these stocks. And everyone who has it, tough. You're going to lose a ton of money, but we're going to save the rich people and the hedge funds. Shocking.
This seems like a betrayal of the basic promise of American public markets, which is they're transparent. It's purely meritocratic. That's why you've been able to make dough during quarantine. You make a bet, you're right, you win. I mean, how amazing is it to discover that that's not real?
Apparently it's real for them. And I love the lectures. You hear it from the hedge funds and the suits, as I call them, but they'll say they're protecting you and we're protecting you versus yourself, and people don't understand the risk and margin. And then you look at them, it's like, buddy, look in the mirror. You're doing the same thing. The hedge funds are betting against companies. We're betting on them. With money and margin, we're doing the same thing. The only difference is we're winning and you're getting your teeth kicked in, and you just said, time out. We're changing the rules. And it's bananas. It cannot happen. And I saw the Robinhood guy, Vlad, he's on TV. He's lying through his teeth. Listen, the thing that really is scary, Robinhood, I'm going to give this guy a shred of credit. When he woke up and he said, we're going to halt trading and ruin our client base, he knew that was the end of Robinhood. Robinhood's done. That company will cease to exist because what they built it on, the day trader, the retail trader, they're never going back. So he willingly blew up his company today. He knew that was going to happen. Why? Who's in the back end? Who's pulling the strings? Who's making the decisions? We have to find out. And by the way, it's not enough just to be like, oh, we're going to slap you on the wrist and give you a fine. These are billionaires. They can write billion-dollar checks like we write $10 checks. Somebody has to go to jail for this. This is intentional market manipulation, and it's everyday people. It's just not the Reddit people. I have people hit me up all the time today, yesterday. They're putting their rent into this. They got caught up in the momentum. And if you lose money fair and square, fine. But nobody was under the impression somebody could just press the stop button and say, guess what? We can crash this stock without you having any say. You can only sell it. You can't buy it. What happened? This is like the movie Wall Street. It's insane.
This is a good lesson for these young investors and speculators to learn now. When playing in stock or derivative casinos, rules can and will be changed to serve the interests of ownership or those who allow said casino to even exist. The Hunt brothers' January 1980 scapegoating in the silver market is just one point in silver history we can look back to. Back then, COMEX abruptly changed the rule for COMEX silver contracts to liquidation orders only. And the margin requirement hikes then took the Hunt brothers over leveraged account to bankruptcy and eventually a $1.1 billion fiat Fed note bailout by the Federal Reserve. So all week, headlines from mainstream news sources to alternative media sites, there was a frenzy of excitement towards which stock or asset class might be the next short squeeze target. Silver, silver derivatives, and even silver miners with short positions became a topic reheating up in the Wall Street Bets Forum, as it also briefly did in August 2020 when silver made a run near $30 an ounce as well. So the question stands, can this happen? Can a short squeeze on silver occur in the 2020s? My answer is yes. A confluence of targets with high capital flows could certainly help produce a short squeeze on physical silver around the world, and ultimately the silver spot price and bullion product premiums would escalate substantially. Short squeezes have happened in COMEX silver, and not in the too distant past. Let's go back and look at recent history. Few know this outside of the silver space, but silver contributed heavily to the Bear Stearns spring 2008 collapse. JP Morgan's precious metals desk literally inherited Bear Stearns' bankrupt carcass, as well as a few of their alleged best criminal silver spoof traders, all of whom likely made a killing of bonuses during the global financial crisis, shorting silver down from 21 to a low in the $8 an ounce range, right around when the first injection of Infinite QE began, also called QE1. JP Morgan's silver desk in the later 2010 and early 2011 basically got caught flat-footed. They were likely naked short and were silver squeezed as silver ran from the mid-teens, to its seemingly ancient $50 an ounce high mark, tripling within about a half year of time. Also at that time, JP Morgan had no COMEX silver warehouse and likely got caught without having enough bullion and had to go out in the market, and bullion became bid up, obviously, and that's why spot ran up so high. There was increased demand around retail and a lot of excitement. Outspoken short squeezer like Max Kaiser had a campaign called Crash JP Morgan, Buy Silver. Here's a brief idea of what that was about.
Hi, this is Max Kaiser, host of the Kaiser Report. I want to talk to you about this global viral campaign, Crash JP Morgan, buy silver. The fact is that JP Morgan is a huge player in the derivatives market. They've got a balance sheet exposure of something like 1.5 trillion. A lot of that is tied to their silver shorts. That is to say, they have sold silver contracts that don't exist. They're engaged in naked short selling. This is a form of counterfeiting. Huge hedge funds around the world are buying lots of silver because they know that if they force JP Morgan to have to buy silver in the open market, they're going to make money. So what I'm saying is you can piggyback on these huge players. All you need to do is buy one silver coin, maybe two silver coins, demand physical delivery of that silver, thus forcing JP Morgan and these other financial terrorists to have to cover their negative bets and put a company like JP Morgan basically forcing them into bankruptcy because there's no way they can cover their liabilities if we all buy one silver coin and demand physical delivery. Put JP Morgan, a financial terrorist, out of business. Buy silver.
Silver analyst Ted Butler, writing in late December 2017, wrote the following: because a big rise in the price of silver would benefit JP Morgan the most, and because the bank understands this better than anyone, it stands to reason that it's just a matter of time before JPM takes the action that would most benefit itself. Actually, the quote-unquote action that would benefit JP Morgan is most in silver, and it's not any action at all. In fact, it's just the opposite. I've long maintained that all JPM had to do to most benefit itself is to do nothing. Simply not add to your short positions. That's easier than falling off a log or slipping on the ice. My point is that there has never been a better setup for JP Morgan to do nothing and make itself a windfall. I add today that JP Morgan, post-2011 silver bullion buy rampage, has legit motives. Seeing their rivals short squeezed is just one. The rivals being the likes of HSBC or Scotiabank, etc. That has already started in 2020, beating their rival Goldman Sachs soon as well in terms of commodity revenues and profits. This red line reflects the amount of silver bullion JP Morgan has amassed in the COMEX warehouse since being short squeezed in early 2011. They went from 0 ounces to now having over 200, or having just under 200 million ounces. That's nearly half, or 50%, dominating the underlying fractional silver bullion reserves of the COMEX derivative market, which is mainly where the ongoing spot price is set. JP Morgan is also custodian of the supposedly silver-backed and popular silver ETF called SLV. No one knows how many hundred millions of ounces JP Morgan siphoned out of SLV over the past decade, nor if they are currently leasing back said silver to the iShare Trust at exorbitant lease rates, or how silver JP Morgan fully still has in their control, and how much of this commingled silver is perhaps double counted. The bottom line is JP Morgan's precious metals desk likely remains an alleged criminal trader-trained greedy bunch. Seeing them front-run the coming commodity bull market with a raging silver price is not out of the question. And given that they likely have large swaths of silver to lease or sell at large premiums, they are in the driver's seat if a legit wholesale 1,000-ounce silver bar short squeeze sets off in this global silver market. Of course, we'll keep monitoring this Wall Street Bets silver squeeze story and trends moving forward. A quick note on recent silver and gold spot price action to end this week. The gold-silver ratio is back into the high 60s. And technicians I know and respect tell me that it could fall quickly to the middle 50s. And just personally judging by the severity of the falling slope here on this chart, that technical, as well as the technical and fundamental setups going on currently for silver, I have no doubt that could happen sooner than most probably thinks possible. And finally, if you want to hear more from me and my thoughts this past week, there's an interview I did with Palisades Radio. You can find the link to it in the comments below or at the end screen of this SD Bullion Market Update. And as always, all you out there, thank you for coming by. Take great care of yourselves and those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.